Thanks for following us on our podcast. Today, Edric and I will talk about investment strategies for a possible economic recession in 2023.
Yes, David and I will bring bold breakthroughs in economics, finance, and investing knowledge education to anyone, anywhere. Thank you for your support. We will continue to make a transformative impact on people's well-being. 2022 was a tough year for most investors. We have issues ranging from surging inflation, the Russian-Ukraine war, the hawkish Fed, China issues, and crypto disasters like FTX. David, do we have a bright 2023 for investors?
Well, I think the stock market might perform better if this Fed starts pivoting and even starts cutting interest rates. But we have to be selective on the investment.
We probably will continue to see some inflation in 2023, and the GDP will only rise around 0.3%. I think many people have fears that we are not only entering recession, but also we are entering stagflation in 2023.
This is a legitimate concern, as inflation will likely continue to hang there. We will see ripple effects of the Fed increasing the interest rate. Higher interest rate results in slower economic activities, which ultimately ends up with a recession. Some issues that will not be resolved by Fed policy, such as labor shortage, Russian-Ukraine war, China COVID situation. When we both have a recession and inflation at the same time, we have a bigger issue called stagflation.
Stagflation is definitely a bigger issue. Many companies might not be able to survive in this environment. As an investor, you have to be very selective if you invest in stocks.
We would recommend investors to look at large companies with low debt, high profitability, strong balance sheets, and positive cash flow. These companies will get through difficult economic times.
I agree. We also recommend investors to look at sectors that will not be affected by economic downturns, such as communication services like AT&T, Verizon, and healthcare providers, consumer staples like Walmart or Dollar General. These sectors are less affected by economic cycles.
If you are a long-term investor, when there is an economic downturn, it is best to buy some growth stocks with fast growth potential in the next 3 to 5 years.
That's a good idea. A lot of good companies are cheaper now and likely will still get cheaper during an economic recession. For example, Google, Amazon, Microsoft, and Apple are much cheaper now compared to a year ago.
Another strategy to hedge against economic downturn is to look at fixed income investments, such as bonds, or dividend-yielding stocks, such as high dividend stocks, because they offer routine cash payments.
Recessions and volatile markets can be frightening times, but if you're investing for the long term, what's more important is to keep an even keel. In many cases, the best thing to do may be nothing at all, to trust the market's resilience and the diversification you've built into your long-term portfolio.
At the end of this podcast, I want to highlight Warren Buffett's famous quote, "Never invest in a business you cannot understand." The main takeaway being that it is strongly advised into investing into industries that you have a much deeper understanding in than anybody else.
Edric and David Fireside Chat is under Investment for All programs. We try to help people learn economics, finance, and understand stock investment. I think David made a very good point. It will be much less risky to invest in companies that you do understand.
We hope everyone has a great holiday season, and let us hope the economy is doing okay and that everyone can make a good return in 2023.